Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in this live stream, we're going to talk about Euro US dollar, what the market is doing so far. As you can see, the key level outline on Euro US dollar being the daily inefficiency. Price has run through that inefficiency, but we're still watching it to see what the market is going to do eventually. And so far, right here, the 4-hour inefficiency as well. After that mitigation, we didn't see any shift in market structure to the upside after the mitigation. So we're also watching to see whether price is going to run the sell side liquidity or most likely going to reject from the open of the inefficiency resting right here. So this is the last line of defense. If that doesn't work for rejection to the upside, then most likely price will run the sell side liquidity. So after running the sell side liquidity, what we're going to do is we're still going to do another analysis on this one to see what the market is hunting for, whether it's for the sell side liquidity or for further downside to mitigate this inefficiency resting right here as well. Because looking at the 4-hour time frame, the only thing we're working with right here is it's either price is mitigating this and a reversal, or this would be the next run on liquidity, sell side liquidity, because take note, we still have this down close candle after mitigating the inefficiency, expanded higher, broke structure. Even though price came back into that position, you can see the bodies of the candle. Price didn't mitigate it, it only tapped the wicks, and after tapping the wicks, we saw an expansion to the upside. So I'll be watching this very closely. Let's use a fresh chart. So looking at this on this fresh chart, I'll wipe everything on my chart on this one. And then we're going to go to the weekly time frame. So on the weekly time frame, this is my weekly range high. This is my weekly range low. Thank you so much for your confirmation. This is my weekly range high, weekly range low. So I'm working within this range high and range low. And right here, using the Fibonacci from the high to the low, you can see this right here is our extreme discount. You can also see how nicely price mitigated the extreme premium. So we'll go to the daily time frame. Right here, this is our daily high, the high that got broken. Right here is the break of structure. Let's look at 16-hour time frame. 8-hour time frame. Let's look at 4-hour time frame. So on the 4-hour time frame, you can actually see this is the swing high on 4-hour time frame, and this is the swing low. And right here was the break of structure of the swing high. Now, if we're looking through to see the last down close candles, this right here was the 4-hour high. So you can see this was the 4-hour high, and then the 4-hour low. And right here, we had the very first break of structure. After that, price came down into this last down close candles, mitigated it, and then we saw an expansion. This is the next break of structure. This right here was the last down close candle. Bodies of the candle is all I'm interested in. After that, we broke structure right here. This right here is the last down close candles before breaking structure from the bodies of the candle. And right here, you can see price came to it, mitigated it. and expanded higher. So right now what we're looking at is whether price wants to run this sell side liquidity. Seems pretty much the sell side liquidity is the next drawn liquidity, because the way price is dropping, it doesn't really seem like there's anything that is going to stop it where we are right now. If there was anything that should have stopped it, it should be from this last down close candle right here. Right here would have been the last key level. So as you can see right here, last push, expansion, break structure, retest right there, expansion to break the overall high. So right here we go to 1 hour time frame. On the 1 hour time frame, as you can see, I'll make this a different color. So far price has mitigated that position. Start to scale down to look at the 15 minutes time frame. We'll have the high, make that darker blue. So let's say this is our low. I'll be anticipating to see a break of structure for me to start looking for any buy. If we don't see a break of structure, then we're just gonna have to be on the sideline. So look at the 5 minutes time frame as well. Personally, I really don't like this high and low on the 5 minutes time frame, but I'll also be watching this very closely just in case if I see a break of structure above this high. Because don't forget, we still have a 1 hour imbalance resting right there. So if price breaks above this key level, then we'll start to watch this very closely to see whether there's going to be a shift of market structure to the upside from this key level. So let's look at what it looks like as well. So let's look at daily. We want to see the daily open. This is the daily open. Price went to the downside, mitigated this position. If we're looking at the weekly open, price went to the downside. So that is my analysis on Euro US dollar. I'll be watching the highs and the lows here, despite the fact that even if this breaks above this high, I'm still not going to be very confident in just jumping into a trade, because this is a very smaller time frame break of structure. I can still wait to see a confirmation, which is a break, retest, wait for 2 minute shift of market structure within the range. If I see that, then I can confidently look for a setup to buy this to continue to the upside. So that is what I'm going to be watching on this one. And most likely for me to really say yes, we're going to the upside now, I would like to see this 15 minutes high right here get broken. If we break above this 15 minutes high, then I would truly want to see a continuation to the upside on Euro US dollar. So that is my analysis on Euro. If you do have any questions based off my analysis, feel free to drop it in the chat. So the next one we're going to be looking at is Aussie dollar. We're going to be looking at Aussie dollar, my analysis on Aussie. So we're going to be looking at Aussie dollar to see what the market is doing on AUD US dollar. So far, price came into our extreme discount zone, took liquidity from the low. If we go to the daily time frame, so on the daily time frame, there's not really, let's use a fresh chart on this one. So this right here on the weekly, this is my drawn liquidity, the magnet's attracting price to the upside. So if we go to daily time frame, this is the down close candle. We had this impulse move, rejection, impulse, broke structure, liquidity. So I would like to see at least a 30-minute shift of market structure to the upside. I have a 30 minutes high and a low. Price wicked above the highs. I didn't see a significant break of structure. But on the 30-minute, on the 15 minutes time frame, as you can see, we have a high, a low, and right here is a significant break of structure to the upside, but I really didn't like it because it didn't align with the 30 minutes time frame shift to market structure. So that is why we didn't get into this trade. And as you can see, price left this inefficiency, came to the upside, mitigated it. We saw a rejection of that key level. So that's really giving me a telltale sign that trying to buy this from wherever it is right now is not really the best decision. So that is why I'm still on the sidelines watching it as well. And let's look at what 3 minutes time frame is showing us. On 3 minutes time frame is showing us a structure here, a high, a low. So I'll be watching to see whether there's going to be a break of structure on 30 minutes on this 3 minutes time frame, whether we're going to have a break of structure to the upside. If we do, then I'll take a closer look at this to see whether there's going to be a reversal from here. But if we don't, then most likely the low is going to be the next run on liquidity. So another thing I was going to bring to your notice is the fact that this week we do have a lot of high impact news this week. Today is Monday the 10th. There's no high impact news today. Tomorrow, Tuesday, we just have only one high impact news on the pound. Wednesday, we have one high impact news by 7 a.m. on the pound. And 3 high impact news on the dollar by 1:30. These are really significant high impact news on the dollar. CPI news, it usually brings a lot of volatility into the marketplace. So if you eventually get into any trade, make sure you protect yourself, protect your trade stop loss to break even. If you're in profit, just take some out of the trade table just in case. You don't know what's going to happen. Nobody knows what the CPI news numbers are going to be, what is going to be positive and negative. So far, you can see the previous one is 0.3% and the forecast is 0.3% as well. So we don't know what is going to come out the same or what is going to come out lower or higher. And the next CPI numbers right here, previous is 0.3%, forecast is 0.1%. So the forecasting that is going to come out lower, which could potentially bring the dollar to the downside, but nobody knows whether the numbers are going to come out lower or higher. This is just a forecast. The news can come out and it could potentially come out higher than 0.1% or even higher than 0.3%. So we're not trying to predict what price is going to do. All we're doing is to look at the market structure. What is it showing us on the bigger time frame? And we're focusing on that. If the market structure on the bigger time frame is bullish, we're only looking for opportunity to buy. So if these numbers come out aligning perfectly with the bullishness, with the overall market structure and the bigger time frame, that means our trade is going to be a high probability setup. So looking at the next one, CPI year on year, for previous is 3.4% and the forecast is 3.4%. So it's basically neutral. It could come out and still be at 3.4. It could come out higher or lower. Nobody knows. Nobody has that information. So all we do, we go back to the chart to look at what the market is doing so far. And so far, personally, I'm still bullish on Euro. Still looking for opportunity to buy. I'm still bullish on Aussie. Still looking for opportunities to buy because the 12-month time frame is bullish. So that is telling me that my focus is to be for price to continue going to the upside. I'm looking for opportunities to continue to buy. And right here, if this key level right here doesn't work for a buy, then this would be my next run on liquidity, my next draw on liquidity. And if price comes there and I see a significant shift in market structure on 15 minutes time frame, then I'll still look for a buy to continue to the upside, potentially run the buy side. Liquidity is low resistance, liquidity resting at the highs. So another one we're gonna look at is gold. Like I said previously on gold, my point of interest, what I'm watching for gold to come down into is this key level right here. So if we go to the 1 hour time frame, we can see very much clearer on the 1 hour time frame. And you can see how price has consistently been going to the downside. Anyone who has been selling gold would have been making a lot of profit, and anyone who was buying it would have been taking significant losses. So the reason is because the sell side liquidity is untapped, and until that gets tapped, that is the only time I'm going to be looking for entries into the marketplace for gold to continue higher. So right here still remains my point of interest. Inefficiency here, low resistance, liquidity resting right here as well. So if the market should come down here and I see a 5-minute shift in market structure from this key level, then I'll be looking for a buy. If we look at the monthly time frame as well, you can see how the monthly time frame aligns with that perfectly. So 1 second. So if we look at gold, let me use a fresh chart on this one. So if we look at the monthly time frame, you can see very clearly on the monthly time frame we have this monthly inefficiency. So if the market drops into this monthly inefficiency, all I'll be looking for is a potential shift of market structure to the upside. If we do see a 1 hour shift of market structure to the upside, then we'll be looking for a continuation for price to continue higher. But also don't forget this high right here, this is a high resistance liquidity. So price coming back up, if we do see a rejection from here and price is coming back up into that key level, this key level is still going to be an area of resistance. So far also low resistance liquidity, so don't be surprised if price eventually rallies above these highs to continue higher. So that is what I'm watching on gold. I'm going to be watching this very closely because price is getting closer and closer to my point of interest. So far, low resistance liquidity. I most preferably want to see this low resistance liquidity get swept. And if eventually if price takes it and then I see a shift of market structure on 5 minutes, I'll look for a buy. Then if I see a 1 hour break of structure, then that means the buy is going to sustain and I'll just be trailing my stop loss to break even and also in profit. So that is my analysis on Aussie, Euro, and gold. If you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you all next time. Have an amazing day, everyone.